The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. And the Dow's down 36 at 20,913. The S&P is down 5 at 2380. This is going to be a really fascinating session. Let me just move this away for 1 second. There we go. The comp index, when I last looked, was down. Yep, it's down 5 at 58.94. Is that right? Yep. The VIX index is at 1134, down 29 cents. I have to tell you something. We're going to be looking at a fascinating period coming up. I'd spoken about this a while back. I said we slice through 20,000 as if it was a hot knife through butter, if people still have butter. But I thought that the 21,000 is going to be a strong resistance area and that we're going to yo-yo around it, and that it's going to be both a magnet and a repellent for a while. What did we hit today? We hit 21,000.11 exactly, and we've pulled back. And this is the reason why I'm a little bit cautious here. Actually, I'm not a little bit cautious. We actually have short positions. And yes, I got an email. Kevin said, if you are short, no, what did he say? It was very well put, and he was correct. I cannot complain about a comment that was made. I'll try to find it right now because it rhymed. So that's the reason why I'm trying to find it. But if you aren't long, you're wrong. I think that's basically what he said. And I think that he's correct because ironically, even though we have short positions, the long positions have done very well. And we still have these long positions. However, this is what I'm really thinking here. The Fed has spoken about almost everything that they need to speak about, right? No charts. Oh, I'm sorry, no charts. Let me go right there. I was so busy. Okay, there we are. Charts are up. We are looking at the E-mini down 375 at 2376. The high of 2397.25 on March the 3rd, I think it was. Was that the first or the third? Was that the speech high? The speech high of 2397.25 has not been taken out. Look at them. This is what I said to subscribers this morning. I didn't mention the volume. I was going to talk about the volume. I got the charts up right now. Thank you, Al. You can see them, right? Okay. What we're looking at here is that the right side rally that we've seen over the last two, yesterday afternoon and today, have got very poor technicals. The MACD is very negative. The stochastic's way down at 49%. The volume spike has been just unbelievable. Let me look at this in the oh, this is the March contract. Oh, that's okay. The March contract. Well, let's go to the ESH 17. Look at the volume. We had the same kind of volume going into the 13th, the week of the 13th. And then the market started its consolidation for about 3 weeks. And now what we've got is about 3 weeks we've had a consolidation with huge volume. Look at that volume spike just from the first. Nothing like the volume spike from the 13th of December, but still very, very strong. My thinking here is that the bears have had to cover all the time. The bulls are getting a little bit overconfident in that they're looking back, and now you're hearing all the stories about how so many people went long when before, right on the day of the election, etc. So there's a little bit of hubris sinking into the market. And if there's one thing that this market, like any other market, cannot stand, it's those little elves, the little gnomes sitting on the shoulder, wagging their fingers saying, oh, I have an expression. When you take your hands off the wheel to pat yourself on the back, that's when you hit the tree. And what I'm really looking at is the H pattern. patterns repeat over and over and over again. So let me just go through this. Let me run the numbers because I'm liable to forget to finish the numbers. Let me just continue. So the QQQ, I had a question this morning. Where would I consider? I believe going long. It wasn't talking about shorting the QQQs. I thought that was very interesting because the QQQs are in leg G. Probably a peak G today. 132.40 has to be taken out today. We missed it by 6 cents. But everything I'm looking at, look at the MACD, look at the stochastic. I've got failure patterns written everywhere. Unless the Fed has really, they've determined that we've raised rates and we're going to stand by. If there's a weak market, we're going to fill up that. We're going to just push green stuff right through the system. That money is just going to flow every day between 10 or 11 o'clock, whatever it is. My thinking here is that we have a situation, and that situation is saying to me that there's upside vulnerability because all the indices that I'm looking at, all the key stocks that I'm looking at are really stretched, and it doesn't matter what happens in a bull market. Stretch is stretch, and at some point there's a return to at least some kind of moving average that is very important. In this case, the 9-period moving average, 131.36 in the QQQ series, takes that out, and I can see a move down to the 120. So the answer was, remind me again in the 128s, 129 to 128. That's where I want to start looking at the QQQs again, as if to say, hey, missed the other move. This is a mega bull market. Maybe that's where we want to start a position, and at that particular position, it will not be a full position, but it will be a starter position expecting some kind of consolidation to continue. Okay, let's go through the IWM. IWM had a spectacular day yesterday, had another high move today. It's pulling back a little bit. It's at 137.86. The iShares Russell 2000 ETF, leg C in the monthly chart, peak C in the weekly chart, and a peak F on the first at 140.86. And now it's pulled back. It's at 137.87, up 14 cents. I think that there's going to be an arch formation that it could be pulling back here. I am wrong if it goes to 139.50 by Tuesday. Okay, now let's go to the nitty-gritties. I want to go to gold. Gold is up 28.7 at 29.4. The 200-period moving average of 1237 is just above. And the 50-period moving average of 1218 is just below. It's actually the low of the day. My thinking here is that gold is in play. This is the first of a series of moves. I will not be satisfied that gold is going to go screaming to the upside until I see the dollar back in the 99s, closing at 99. I think that might happen, and that's the reason why we are attempting. We had a position in gold, got taken out. But I'd like to get back into the gold position because I think it has some legs. Why? The Fed has said we want inflation. And Janet Yellen said, I don't really see it. Of course, she's never shopped at a, maybe she has, but I don't think she shopped at a supermarket for a while, maybe 5 years or 6 years, because if she had, she'd see that there's inflation in space and the stuff that you really need, but there's not so much inflation in the stuff you don't have to have. All right, I'll be back. Basil Chapman, Tiger Technicians Hour, Dow's down 35, S&P is 4. I think we're consolidating. I think the consolidation that started earlier is continuing. I'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. Dow's down 38. S&P's down 4.5. And we've got on the line, we've got Mike in Ormond Beach, Florida. Mike, how are you?
Great, Basil. Yesterday, I sold some of my gold stocks near the close. And I was looking to get back into Agnico Eagle Mines, trading symbol AEM. I was looking at it on a 5-minute chart, and up just a few minutes ago, it looked like we had a trough E, and it looked like there's a lot of great support around 42.10 to 42.15. Do you think that'd be a good price to get in at?
So, all right, now we're talking two different things. One is you had a really good trade. I compliment you on that. I also have a quick question as to say, why did you exit all your gold stocks yesterday? What was the reason for getting out, even though it was a really good gain? Was there some other reason than just treating it as a short-term trade?
Yes. Well, here's what it is. I work a lot of hours, and the way I have to trade is I put the limit orders in, and sometimes I can't always get to them to change them. And, you know, I looked at the chart and I thought an area of, you know, resistance, and so anyway, I made out okay, but it's just unfortunate. I have to spend so many hours at my full-time job. I can't utilize all the knowledge that I've acquired from you guys to get the most out of my trades, but I've got a lot of winning trades.
Well, two things. One is I have to compliment you because it's really tough. I know sometimes work gets in the way of pleasure, and sometimes pleasure is even more profitable than work, or just as. But that's life, and I think you're dealing with it beautifully. Don't be frustrated. I think you're doing very well. And let me tell you something. That was a brilliant move that you did yesterday, because I think you will have time. I do think that the gold stocks are in play, and that's really important. I might be wrong. I'm calling this leg B in the 5-minute chart. Made a peak E from the big spike up at 2:05 yesterday. That's 2:05 Eastern time, and it's actually looking like it's done for the moment, and it just needs a breather because it was such a very strong sudden move. The 10-minute chart has the same sort of thing. Now, what I'm going to suggest is this. You have a methodology. That methodology seems to work very well for you. I know in the den, a lot of people, so, you know, I often get a call from Scott, who has fabulous trades. He uses big positions and he sticks with certain stocks, and he goes in and he goes out and he goes in and he goes out.
And that's
everybody in the den.
Yeah, I kind of I praise Scott a lot because I have to kind of trade like that because of my job.
Okay,
And,
let me just, before you go on, I want to finish my sentence. And my sentence was that in the den, a lot of people said, "Oh, tell Scott to join the den. Tell Scott." That's number one. And number two is, a lot of people said, if one person said, "I'll pay for Scott's yearly subscription," and I said to them, I typed back, I said, "No, Scott," and we've got a person called Garo who often calls. I think he used to call me.
Yeah.
Call Steve. There are a number of people. There's Carlos. We have a whole bunch of people that call. Tom just called Tommy and Tom just a short while ago. We've got a lot of people, regulars, that have their way of doing it.
Mm-hmm.
I'm going to suggest to you that if it's working, that's all you need. You don't need all the extra complementary things. Yes, what you do need sometimes is develop some of the techniques and then make them yours. And that's really, I want you to congratulate you, because you are doing that. And I don't want to even get in the way of that. What I want to say to you is, I'm going to make the suggestion, but I'm going to leave it to you. I'm going to make the suggestion that AEM, which is Agnico Eagle Mines, I think is it silver or gold, or is it a mix? I can't remember offhand.
It's
I think it's a mix. So it's trading at 42.45, down 54 cents. Had a high this morning of 44.38. The high yesterday was 43.15, so a little higher than yesterday. But I'm going to suggest to you that if it pulls back, 41.62 is the 9-period exponential moving average.
Okay.
And $40 is really, if it starts to take out $40, it has the look of an H. Do you know that pattern I always talk about, the lowercase H, the dreaded H?
Yeah.
And all I'm going to say to you is you've had your big move.
Mm-hmm.
What I'm going to suggest is that think about positioning yourself for another potential big move, but might be slower this time. And therefore, you don't have to be in a rush. What I would say to you is, within the area that it's in now, at 42.42 and 41.50, that's where I'd be looking at starting. And this would be a different thing. I would start a small position and then step back and say, I'm not going to do anything. That small position is there. I'm going to have a fairly wide. You can even have a 10% stop on it. Why? Because the 200-period moving average at 39.40 has been so strong as a propellant that my thinking is that the gold stocks are starting to form some kind of a base of importance. That's really the issue. So you want to get a position, maybe it's not Agnico Eagle, it's something else in the gold sector, but you want to start building a little bit of a core position, and you keep your trading just the way you've been doing it, because I think you've got a terrific technique to do that. Let's do that. And I'm just going to say to you, you're out of the positions. You want to be starting to step in a little bit. I'm not sure I'd be that aggressive just yet. Right. I really need to see what happens, because the dollar is still in play, even though John Logan did a fabulous review of the dollar, and he's been kind of negative, and it does have the H pattern. That doesn't mean to say that gold is going to spiral to the upside from here, but I do think gold is in play because the Fed has said inflation is what we want, and I think gold always represents some form of inflation. That's the reason why I think starting little bits of core positions in some of the stocks, not a bad idea, and then keep your trading positions where you just take things off because you're at work, you just want to know you're in at a certain point, you know your exact risk, and you know your exact reward, and you're out.
Right. And Basil, I sent you an email showing you some of the gains that I had last year.
Correct.
And that's because of the way I have to trade at work, and all the things that I've learned from you have really helped. I mean, the 9-period exponential moving average is such a great area of support.
It is.
And if you get into something that's below it, I mean, it acts as an upper resistance.
Correct.
Usually a lot of times it runs up to it and gives it up. And then, of course, after that, I use the 50 period. So a lot of times what I'll do is I'll buy something, and if it's, depending on the personality of the stock, but, I mean, some stocks, they'll do that. They'll run right up to the 50 EMA.
It's amazing,
and then that'll be resistance. And
I know.
I usually put my sell just a little bit below it, and I've got a lot of winning trades doing it like that.
I love that. And that's, I remember back in going into the year 2000, the beginning of 2000, I couldn't tell you how many people said, oh, man, and they gave up their jobs. A lot of people gave up their jobs thinking, man, I'm a genius. I can do this for the rest of my life. In fact, I don't have to do it for the rest of my life. By June or July of 2000, I'll be a multimillionaire. Well, stick to your day job and have fun with the market. That's really the best way to do it, because when you're doing that, you're saying, I have security, and now I can have leeway to build capital equity in my own time and always feel like there's no rush. Tom always says there's always another trade. Right. I have to tell you, it just sticks in my craw when I make a mistake because I was too anxious to get into something. So, yeah, I think you're doing it just beautifully. Keep it up, Mike.
Okay. Thank you again for everything you do, Scott, Garrow. You got great people to call in and also add to the show, and I really appreciate it. Thank you, Basil.
Thank you so much for calling. I appreciate your appreciation. We'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. So the TNX, this is the 10-year T-note yield. In other words, like bonds, when bonds go down, the yield goes up. It's like a seesaw. And when bonds go up, yields come down. And what we've got is the peak D. Remember, what did we look for in the Chapman methodology? I wonder if I've got it right here. Always like to do that. I'm going to do an overview now because I'll be away next week. And I do want to get, yep, there it is. getting a crowded set of screens here. I've got to clean that up. Okay. So this is the look of the Chapman Wave buy mode. You come down, start a buy mode, it turns around, you start a peak A, a peak B, penny above B starts leg C. Leg C is a floating ladder until it becomes a peak because there's a lower high bar. And then the moment you go one penny above C, it starts leg D, and I mean a penny, even it's 0.0001, all right, whatever that is. And then you get to a leg D. At D, other things can happen. All right, let me explain that. We've gotten to a D in the TNX, in the daily. The weekly chart, 26.21, 26.15, failed by 5-6 cents to touch it or 7 cents to break it. So it's like a double top here with the MACD deflecting lower, the stochastic running, but not that great. This is a key moment. And my thinking here is that we're looking at a situation that tells us that the TNX, if the MACD crosses negative and the stochastic at 84 goes to about 77%, that's going to say to us, oh, I have to get out of this. I want to do this. I want to clean this up now because I want us to be looking at the apples to apples. So let me just do this ESM 17. I don't think I even got a chance to talk about it. The E-mini, the 10-minute E-mini, because this is the chart that I'm getting rid of right now, has made a full arch formation at a peak G. It's turned down. It's in leg F to the downside. MACD and stochastic are very negative, but it's just about to get to the left side low of 23.75.25, the low of the 15th of March. And what is the low? 23.74.50. So we're just under it. And that's really just a nebulous support level, but it's a support level, because if it doesn't, you're going back to the low of yesterday, 2 o'clock, of 23.70.50. So, okay, I'm out of this now. I can show you. So upside resistance is 23.78 to 23.81. That's the resistance today on the E-mini. And so far, my thinking is that everything is matching what we were discussing. One of the reasons why we are short, the indices making a fairly tight stop. I don't have to be, I don't have to risk. This is not, I'm not going to put our head in the block. This is just the way it is. I did it purely on the technicals, and I'll be wrong if I'm wrong. And I'm waiting to go long, big long. But I'm going to have to wait a little while longer. Now I'm going back to the TNX because this is the chart I wanted to show you. It is my triple yield chart. In a triple yield chart, that means I've got the 30-year. The white is the 30-year T bond yield, the TYX, trading at 31.36. Broke to a new high. Have to call it peak F/B for now. Why? Because it's the cup formation. In the 10-year T-note yield, trading at 25.20, 2.520%, that's the same cup formation, made a slightly higher high. That's why it's a D/B. And it's the same thing in the 5-year. Now, what's really important about this, if the bonds start to rally from here, if the TLT rallies, and the yields start to pull back, and so far there's a little bit of a match with the high that was made, excuse me, the week of the 3rd of January in the same indices. There's a little bit of a match, certainly in the 30-year. I'm making it real simple. In the next week and a half, if the yield goes below 30 in the 30-year, if it goes below 19.25, 1.92 in the 5-year, and 24, 2.4% in the 10-year, we're back to the Japanization of our bond yields. And that's going to suggest it's time for the market to take a breather. I am completely wrong. And remember, I'm not afraid to say I'm wrong. I've learned that a long time ago. You get the little genie off the thing that's wagging your finger saying, you're sitting there with a 20% loss, where, and you can't think clearly. I don't like to do that. It's just against my nature. I'm clean it out. We start fresh. But the wood, W-O-O-D, the iShares Global Timber and Farsi ETF has gone to a G/C. I didn't expect that. And it's done that this week. And that's bullish. And the HGX, the weekly Philadelphia Housing Sector Index has gone to an F/C. That's so far bullish. So I don't want to get too carried away here. I'm going to just make it real simple. If the TLT trading at 117.98 is able by Wednesday, this coming Wednesday afternoon sometime, you see it trading at 120.50 or higher. And the Dow Jones Industrial Average is trading at INDU, is trading below this candle right here of 3 days ago of 20,786. I'm going to make it this low here, 20,077, the low of the 9th of March. We have made a short-term top that's gone from a sell signal, we're still in the sell signal in the Dow as far as I'm concerned, to a sell mode. Until you break under or get close to 20,500 in the weekly, it is still a great looking chart, but I've got a peak D. What did I just discuss? In the Chapman Wave methodology, D is where you've got to be careful. All right? Simple. Okay. So I've got that out the way, and I'm completely wrong. That's I finished that sentence. If the Dow goes not to 21,170 for a new all-time high, if it goes to 21,250, I don't care any time in the next 2 weeks, that is really positive. And that means the Fed has spurred on the acceleration phase. And I didn't want to do this now, but I'm going to do it because I won't be able to do it later. If I can just move this computer away a little bit so that I can see what I'm doing. There you go. So I'm going to show this right now. And what is it? It is this picture right here. What is this picture? A look at the soon-to-be tallest building in the world. You see the clouds? You see the spiral? This is not from the ground. This is from the clouds. This spiral up here in 2020 will be complete, and it's going to be the tallest building, the world's tallest building, and in fact, it's called Jeddah Tower, I believe. Let me see. Can I find that? There it is. Did I put that in? Yeah. The Jeddah Towers in Saudi Arabia, 2020 with American architects. Look at that. We've been discussing this for I don't know how long. Frank Lloyd Wright designed his mile-high building back in the 40s or 50s. I think it was the 50s. Everyone thought he was absolutely nuts. He was only 70 years ahead of his time, just like Einstein. And look what we got, a mile-high building. So I think that's part of the coda phase that we've been looking at for a long time. When does it end? Can't say. I'm getting better clues, but I can't say. All right. Lightning Rod Supreme. Yes, Duffy. I'll be right back. Basil Chapman. Dow's down 40. S&P's down 6.5. Be right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, we're back. So here's a question, very good question. Someone who has been long the home builders, Toll Brothers, TOL is a symbol trading at 36.89, up 73 cents. Leg E in the MACD is very strong, but it's making the M pattern. So the right side says it's getting close to some kind of a pullback. The high was not confirmed by the stochastic, which is a 79%. Leg D in the weekly, leg D in the monthly. So the question is, let me get the exact question. If you had home builders told DHI, would you just hold or sell some? This is one of those cases where I'm going to say to you, because you're a long-term buy and hold, I'm going to suggest that right here at 36.88, I would take just in pure money management, because of the number of bars it's been above the 9-period moving average, saying that it's probably within a week of starting to trade below 35.84, the 9-period moving average. I'd take something off right now. I'd only take something off to reward yourself, number one. Number two, to have good money management, to say, hey, I've done really well. I want to reward myself for buying and holding and not getting shaken out. And number three is you are in leg D in the weekly chart. You are in leg D in the monthly chart. This is where the yellow light just flashes, say, be a little careful. So those are the 3 reasons. But I would suggest to you that at least in one of them, so DHI, I believe, is that right? DHI is the other one. Let me get there, DHI. DHI is DH Horton, trading at 33.72. Also in leg E in the daily. Leg C only in the weekly, and it looks to me like it eventually wants to test the 34.56 high of the week of the 22nd of July of last year in an arch formation, and there is some sense of a left side, right side price time match. This is a little bit different. It hasn't taken out its all-time high, and it's close to doing, not all-time high, sorry. All-time high was back in 2005 in July at 42.82. I remember this well. So all I'm going to say in this particular instance, you could do the same thing, but I'm probably going to suggest that Toll is the one that you want to take a little bit off and put money back in. And you could do maybe 3 points lower if you get that. That's just what I'm thinking. And this has got a cup and handle breakout, which invariably goes to at least a D, but probably an E. And then it pulls back and it tests the breakout high. And that would be DH Horton, the high of the 26th of January at 31.90. 31.90 is about 2 points lower. So if you want to do the same thing there, but all I'm saying is that they've achieved what you wanted up until this point. They were getting close to some kind of resistance. The technicals are suggesting it could be a little bit limited to the upside now, not so limited to the downside, even though I'm not calling for anything other than a shorter term sell signal possibly, take something off. Yeah, I'm going to say in both of them. Take a little bit off, plan to put them back. Don't be in a rush to put it back, but plan to put it back in the same sector. Okay. Just real quickly, so this is what I want you to do. I don't want to run out of time because I probably won't be able to do my shows next week. I will do my newsletter every day, or at least I'll try to do it every day. This is what I'm looking at. In the Dow, my suspicion, and it's not yet confirmed, but I'm getting some sense of it, at least in the shorter term, is that unlike the 2000, you see right here is 20,000. Look how we stopped just below it, and then bam, right through. I think this is going to be choppier. 21. I would like it to be choppier. Why? I want to build up some sense of renewed energy. I think we've kind of used that up. I don't want the Fed to spur a move into the 21,300s yet. I don't want the S&P, SPX.X, to go from the high that was made of 2403, was it 2401, 2400.98. I don't want that to suddenly be looking at 2400. I'm sorry, 2430s, 2420s. Not yet. I would like to see it, but not yet. So what I would love is for another 3 weeks or so, 2 weeks, maybe 3 weeks of consolidation. Larry showed a chart today that he got from Investors Business Daily. I should have checked it out in my Investors Business Daily, my electronic one. I didn't get there today. But look, I took a picture of it. Where is it? Is that it? Yeah. Investors Intelligence Survey. Oh, this is Investors Intelligence. Yeah, it was in IBD, he said. Maybe it wasn't. So this is Investors Intelligence Survey. Look at the bulls. Look at the percentage of the bulls, and look at the and look at the bears. I mean, this is not good. This says that we are real close to some kind of a consolidation. Does it have to happen now? No, these things can go for a while. I'm just saying, it's just a heads up to say we need some kind of a. I want this to continue as a consolidation. I don't want to see a bear market right now. I mean, even though we're in position that we'd be favorably inclined towards that degree of a pullback. Yeah, I just want to see some kind of a rotational correction. I'd like the IBB to pull back. It's already pulling back down 4 today, almost 5. I'd like that's made a peak D, double top. This is the Chapman wave drop bucket formation, double top formation. Look at that. Right there. You had a falling axe. You went 1-to-1 to the upside. Didn't take out the previous high. A little bit vulnerable now. And it's a peak C1, C2 in the weekly chart. Could pop a little higher to the 304s just to get that leg D. It doesn't have to. It tried. MACD is terrible. And stochastic's very poor. So I'm looking at this and I'm saying in our rotation, we're kind of running out of where to run. You can't have these one-day spikes to the upside. And actually, the Dow, it was very disappointing yesterday. Look at this. The Dow should have had a spike with the Fed and everything. It should have been way above this doji candle of the 3rd. It should have been at 21,040, 21,040. And closed there, I would have said, hey, I like that. And within the context of the markets, I think that we're in an H pattern. Look, here's the same chart. This is the Dow daily. Made a Chapman wave 5 at 21,169 on the 1st of March. And this pattern is just, we've seen it so many times, it's formidable. To break this pattern, you have, this is the exact opposite of what you wanted today. Down 41, you really wanted to be more than 41 points, 50 points higher from yesterday's high. And then I'd say, oh my, now we can get the H, lowercase h, successful retest that can go to a cup formation. And that'll say, man, within days we should be at 21,169. So far this just says patterns never change. MACD is very poor. Stochastics trying to rally, but it's really flat at 37. It's not good. And the red 9-period exponential moving average right there at 20,787. I think we're going to head for that sooner rather than later. That's my thinking. That's kind of our positioning. I mean, we have stocks. They've done nicely. One particular stock we got the other day We lost initially, and then we went right back in, and now it's up 6% just today alone in a market that's basically down. Just trying to find those positions, a very low price stock, trying to find those positions that have the potential for a nice percentage gain while everything's just kind of chopping around. I'll be back. Basil Chapman, Tiger Conditions Hour. Dow's down 42. We'll be right back for the final segment for a little while as I go away.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So the E-mini's down 4. It's gone to a trough F in the 10-minute chart. The MACD's starting to turn up a little bit. You can see the histograms improving. The stochastic way down at 15, trying to make a V-shaped recovery. I still contend that it needs to break. This is the March. It needs to June. I'm sorry. The June contract needs to break the 2378 resistance, and then 2381 will be the very strong resistance. And you can see right here in my automated Chapman Wave methodology, we're right there to hit that 2376, 85. Of course, it doesn't go into quarters, so it's called 75 resistance, and it's really struggling to break out. But day is young, anything can happen. So let's do this. I've got a couple of questions. Let me just deal with it in the context of what I'm looking at. The IYT, IYT is the iShares Transportation Index. Had a big move up yesterday, a big reversal yesterday, but it isn't holding it. It's made a peak D, a very definitive peak D in the weekly chart. Is pulling back. Leg C still bullish in the monthly, but the daily chart peak D has pulled back very sharply. I think it's in this trading band, which gives the IYT 170 resistance at 166.02, down 50 cents. But if it takes out in the next 3 to 5 sessions, if it takes out the closes below 161.58, that's just not going to be a good sign. And that's going to be a little deleterious to the strength of the market. So that's that. If I look at the TLT, let me be clear here. TLT is holding steady. TLT in the 119.75 to 120.25 area. That's very good action. That's going to suggest if it goes up and the market pulls back, money's flowing back again into the safety of bonds just for the moment as the market corrects. That's what I'm looking at. Viewpoint on trading to the option expiration. You know, my bias at this particular point is chop, chop, chop with sudden pullbacks that get some buying and buying that gets some selling. I think we're stuck in a range right now. Just as the way I have to look at it, I have no choice based on my GE, IBM, UGX, and Triple M Dow Quartet Index, and that's what I'm looking at. So that's what I want you to mention. But to make it real simple, this whole thing for years has been about the VIX Index. It's trading at 1144. Yesterday, it took out that key support level in the daily chart. That key had 3 rising lows, and then it took it out, but it closed nicely above it. I'm going to make it real simple. As long as the VIX index stays under a close of under 13, you're going to see buying pressure come in. The moment you get the VIX index, and you've had the splits now, TVIX is no more fun. It's up in the 30s now instead of being 3.9. You know, we had a wonderful, oh, don't forget Saturday, please. This is a very important thing. Saturday at the, down in Tampa, you've got, go to the front page of TFNN, just a fabulous workshop coming up with Tom O'Brien, 2 75-minute sessions. It really should be fabulous. And that's in Tampa, free, but you've got to sign up, and please do that. So what I wanted to say is, the reason why I thought of it is that we've had a series of higher lows. I'm going to make it simple by saying if the Dow starts to trade in the 20,700s, as the VIX index starts to close, it can't just get there and then stop. It's going to close at least 2-3 days in the 13s or higher. You're going to see this market correct. And it'll correct maybe in time, maybe in price, but it will correct. At this particular point, we can only start positioning ourselves for the potential. And at the same time, I wouldn't be overly aggressive in going to the short side. I wouldn't be overly aggressive, funny enough, going to the long side. Just look at your trades and keep doing them over and over until they stop working. The other thing is, when you chop and churn, you've made some nice money. Now you're chopping and churning. That's a message to say market's changing its character. And that's really important to note. The market changes its character very often. You must identify it. I think in a sense it's starting to change its character a little bit. Day's young. We'll see what happens at the close. Have a wonderful day and a wonderful week. I'll be back. I'm going away until the following weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.